Stocks have had a few good weeks. Can the trend continue? Let's ask Tony Dwyer. He is with Canaccord Genuity, Chief Market Strategist, and an old buddy who's been covering Wall Street forever. Tony, good to see you again.
It's great to see you, Rhonda.
And I'm glad you're here because you've really followed so many market cycles over the years. So this is kind of a strange market, right? It looks like we're in a little bit of a recovery from the lows, but people aren't yet convinced.
Well, it's funny because so many people say it's a short covering rally and it's a low volume move off of the low, and those are two things that really happen every single time that you have a bear market low or a crash like low. And I think one of the lucky things of being through a number of cycles is you come up with indicators that show that maybe it's not so unique. And as you were declining into that January crash-like period, and then again in February, there were a lot of indicators going off that it was like a 1998, a 2011, and even a 1987 in some ways. So the market just kind of did its own thing, and there's not a lot of structure.
At this point, though, do you think the market is getting its legs a little bit? Obviously, oil steadied and come off its lows, so that's been the fixation, and that seems to be helping lately.
It is. Unfortunately, the movement has been tied to one thing, oil prices, and there historically isn't a great correlation to oil, so at some point that's going to break up. But it's been a nice recovery. And it's interesting because I hear a lot of times that this has been, some kind of extraordinary bear market rally. If it were to stop as of Friday, it would be the shortest bear market rally since 1957 when it became a 500 stock index. At 20 days and 9%, typically it's something over 50 days and it's 12%. So not huge upside, but it's kind of a normal recovery after a real big drop.
What can the Fed do next week to either help that recovery along or derail it?
I think what they could do to derail it is get real aggressive, because one of the things that I kind of missed, and I wish I didn't, but I did, is the credit tightening outside of Fed policy. Corporate credit really dislocated, where the energy space and the weakness in the high yield debt and energy, which had become 18% of the high yield index, that weakness morphed into other areas of credit, and you had tightening financial conditions, and a stronger dollar didn't help. Right now we have the dollar weakening, especially against some emerging currencies. We have oil prices rallying back, which is helping corporate credit. So if they say something that's aggressive that halts that and it just changes back, then that'll create a little bit of a dislocation.
Well, you can't control the Fed, but you can control the way you think about the market. I know there are three sectors in particular you look at as perhaps areas for some outsized opportunities. One of them is information technology. So tell me your investing thesis around that.
I have done a great job over the years, as you know, proving that I'm not a very good short-term trader. So our sector calls really go on to these long-term thematic frameworks. So I believe that something that is talked about but not really focused on enough is the millennial demographic. We were talking about our children, which were toddlers when we met, which are now in and out of college. Everything's right there, right? So technology is everything that they do, everything they touch. Everything that they watch, everything that they read, it's all about technology. That millennial demographic, as it ages out and has more money to spend, is going to increase their spend on information technology. Consumer discretionary, same, and they're going to need the money from somewhere, so the financial institutions. Those are our three real sector bets. But again, I think what is understated is the millennial demographic is as big as the baby boom generation in peak birth year. So over the next 5 years, you're going to go from maybe 3.4, 3.5 million people turning 30 to 4.2 million people turning 30. Okay? That's why household formation is starting to move, and that's really our theme, is millennials, household formation, and getting the money to spend.
Makes sense to me. Tony Dwyer, great to see you again.
Great to see you, Rhonda.
I'm Rhonda Schaffler for TheStreet.